let you know.
Okay, sir.
Okay, we'll start. No, instead of waiting. Can you see the PDF?
No, sir, not clear.
Okay. Can you see now?
Yes, sir.
Yeah. Right. So this reading is all about the security analysis, right? So in security analysis, the basic reason why we go for security analysis is we would like to invest our money, and when you invest, you would like to get the return. So the investment should lead us into getting returns, and to get a better returns, we need to understand the securities in a proper way, right? So what we do, we'll analyze the securities before investing, and we have two types of analysis. One is the fundamental analysis, the other one is technical analysis. So today we'll dedicate our time to understand the fundamental analysis, right? So generally, if the investments is for short term, we call it as speculative. But the generally, if you're holding the investments for long term, we call it as investment, right? So to realize return, right, one must execute different methods for forecasting the future behavior of the investments and rate of return on them, right? So we use the rate of return, and we would like to know the rate of return on the securities. We need to understand and forecast the future behavior of the securities, right? And for that, we need to analyze the securities in a proper way. So we see, this the fundamental analysis, technical analysis, and efficient market theory. These are the three contents in this, and we'll try to understand the fundamental analysis today. Right. in fundamental analysis, what we do is we have two approaches. One is top down approach. The other one is bottom up approach. Bottom up approach. So in top down approach, what we do is we'll we'll try to understand, right. So in top down approach, we try to understand economic analysis. So can you see what I'm typing? Industry analysis and company analysis. In company analysis, right, in company analysis, what we do is we have two things in company analysis. One is the qualitative analysis, and the other one is quantitative analysis. So this is how the entire fundamental analysis goes, which is the top-down approach. In a bottom-up approach, what we do is first we analyze the company, then we'll go to the industry analysis, then economic analysis. So when it is qualitative analysis, what we do is in company analysis, we generally go for qualitative and quantitative analysis. In qualitative analysis, we'll try to understand the basic characteristics of the company. Then in quantitative analysis, we analyze the company using the financial statements. That's what we do in the entire fundamental analysis. So, what is it? We discussed this. Investment is the employment of funds with the objective of achieving additional income, right? Or growth in intrinsic value of various securities. So, suppose if you buy a security by paying 100, right? The basic objective of investing this 100 rupees today in various securities is to get some additional income or growth, right? Additional income in the form of dividends in equities, interest in fixed income securities, or growth in intrinsic value. So what we expect is, suppose if you are investing 100 rupees in equity, we expect the dividends in every year, and we also expect the growth in the intrinsic value. That means 100 rupees should become maybe 110 or 120, right? So if the investment is generally for short term, we call it as speculative in nature, and long term, we generally call it as investments, right? So as we discussed, the fundamental analysis is a method of finding the future price of stock, which right. So this is actually not to find the future price; it is to find the current price of the stock, right? If you want to buy today, if you want to buy a stock today, how much price you would like to invest, how much price at which you would like to buy the stock today. That's what the fundamental analysis. Given are trying to understand what could be the economic condition, what could be the industry condition, and what could be the company conditions for the next 5 years or maybe 10 years. You would like to understand the the current price of the stock, and using this year valuation, right, you compare the price what you got with the price what is prevailing in the market, right? And you take a decision whether to hold the stock or buy the stock or sell the stock. That's what we do in the analysis, right? And when we specifically talk about fundamental analysis, we have three issues to understand: economy, industry, and company analysis. Right? So when we talk about economic analysis, the reason if you observe, right, the reason why the stock market has increased maybe by 1200 points yesterday, is because of the positive news related to economy and GDP and all, right? So when there is positive news related to economy, generally the markets move up. When the markets are moving up, that is because of the stock prices are moving up, right? So that is the reason why we need to understand the economy in which the company is operating. Suppose if you take Reliance, if you take TCS, or maybe Infosys, Tata Steel, Tata Motors, uh, most of the times the share prices will get affected by the performance of the Indian economy. Of course, their price, the stock price of these companies will be dependent on so many other factors. One of the most important factor to consider is the Indian economy performance, present performance as well as the expected performance in the next 2 to 3 years. Right? So that is the reason why we are supposed to understand the economy in a better way, and to understand the economy, we'll do the economic analysis and various factors to consider in economic analysis, right? Like this: gross domestic product. This gross domestic product represents the aggregate value of goods and services produced in the economy in a particular time period. Generally, it is 1 year. So, the amount of the value of goods and services produced in an economy is GDP, right? And we became the fifth largest economy in the world, right, surpassing in UK, and we are expecting to be the third or second best economy in the world, maybe by 2047, right? And we would like to become the developed economy, right? So GDP consists of personal consumption expenditure, private domestic investment, government expenditure, right, like CGI and all, right? And one factor is GDP, the other is the growth rate of economy, right? So in a recent report, our growth rate was around 8 percentage, and the analysts expected it could be around 6.5, 6.6. So we achieved a better growth rate than the expectations. When this happens, obviously the economy is in a good condition. The economy is growing at a faster rate, which indicates the future prospects are brighter for the companies which are operating in Indian economy, and that reflects in the stock markets. Right? So the prices will increase. So you need to understand, the stock price behavior of the stock price, you need to understand the economic factors also, right? Savings and investment pattern, right? So India is basically a savings nation, right? If you compare with many of the developed and developing economies, Indian economy is mostly, the investments in Indian economy or Indian capital markets comes from the savings, and we are generally a savings nation, right? The growth in investment is substantially depends upon the amount of domestic savings, right? So when the people are planning to save their salaries or their income, right? A part of the savings will move towards the investment. So it's always good to see that the people have the tendency to savings, because they do not keep savings idle. Instead, what they do is they start investing part of savings in the capital market. Though the penetration of Indians or the investments from the Indian households is relatively low, but still we are basically driven by the savings of the individuals, right? The stock market is a channel through which the savings of the investors are made available to the corporate entities. So we know, no, there are suppliers and there are the receivers, right? The Indian households or the individuals, right, are the suppliers of capital to the people or the corporate entities who need it, right? Savings are distributed over various financial instruments. Like the people who would like to save generally do not invest in a particular equity or the mutual funds like this. They distribute their savings to various investments, right? Investments into equity, investments into deposits, mutual funds, bullion markets, right? So the savings pattern of the individuals and households, right, will impact the stock markets to a greater extent. So inflation, along with the growth of GDP, if the inflation rate also increases, then the real rate of growth would be very small, right? So there is a fundamental relation, right? Just let me write here, right? Small r is equals to I minus capital I. So which indicates R is the real interest rate, small I is the nominal interest rate, and capital I is the inflation rate. So what this relation tells us, just give me. So real interest rate, what investors receive from the investments is to be adjusted for inflation rate, right? So if a bank promises 7% interest rate fixed deposits, right? That doesn't mean that your rate of return, what you actually really get, is not 7%, right? That's the nominal interest rate, which should be adjusted for inflation to get the real interest rate. So, say suppose if nominal interest rate is 7 percentage and inflation rate in the economy is 5 percentage, then the real interest rate what investors get is only 2 percentage, right? So this is the reason why the central bank, the Reserve Bank of India, always focuses on the minimizing the inflation rates, or sees that inflation in the economy do not go up, right? So if the inflation is above the nominal interest rate, say suppose if the nominal interest rate is 7 percentage and the inflation rate is 8 percentage, what does it mean is your real rate of return will be negative. So RBI focus mainly on inflation because if the inflation in the economy is high, people generally would not tend to invest their money in fixed income or maybe the post office savings because their real rate of return will be negative. Right? The next factor is interest rate. The bank's interest rate affect the cost of financing to the firms, right? So generally, if you observe the relation between inflation rate and interest rates, right? So if inflation rate increases, RBI increases the CRR, SLR, right? Increases the interest rates. The interest rates are increased, right? It becomes costly for the corporates to borrow money from the banks, or it becomes costly for the investors to the people of the country to borrow money, right, and invest in various other goods and services or purchase. The consumption will get affected. Because of that, the inflation will cool off, but the problem is the investments will get affected. So interest rate and inflation rate should always be, if inflation rate is under control, interest rate will also be low. But to contain the inflation, the RBI generally increases the interest rates, because of which the interest rates will increase. Higher the interest rates, it becomes problem for the investors to borrow money and purchase goods and services. And it also same for the companies to borrow money from the banks at a higher interest rate. Right? So the government budget, right? So in a recent budget, we have seen presented by the Nirmala Sitharaman ma'am, right? So government budget draft provides an elaborate account of government revenue and expenditure, right? So if government is ready to spend money, capital expenditure, right? If the government is ready to spend capital money on long-term projects, we generally call it as capital expenditure, then it's good, right? Then it is good that, because when the government itself is ready to invest huge amounts of money, let it be on roads, right, construction of various other real estate, issues, the infrastructure issues, then it gives employment to a lot of people, right? Because of that, there will be income levels of the people will increase, or most of the population will get employed like that. So the capital expenditure, government budget draft gives more, if the government expenditure is good, then it's a good thing for the capital markets. A deficit budget may leads to higher rate of inflation, which adversely affects the cost of production of the business operations. Right. So, what does it mean by deficit budget? Is it is the government would like to spend more than what it receives, right? So that's a deficit budget. Then, because of the deficit budget, right, as it is ready to invest more, as it is ready to invest more, again, the inflation rates generally increase. If there is a surplus budget, it results in deflation. Deflation is a decrease in the inflation rates, right? The tax structure, everybody who is under the tax bracket generally expects, right, eagerly waits for the government's policy regarding the tax brackets, and if tax reliefs are given, then that may lead, say suppose if my income is 10 lakhs, and if I'm paying 1.5 lakh in the form of income tax, then my real income is 8.5 lakhs. So if the government gives me a benefit of 50,000, so what I may do is that 50,000 I may transfer to the capital market. So tax structures also plays crucial role in understanding the economy analysis. Right? Then balance of payments, right? So what is balance of payment is the record of the country's money receipts and from and payments abroad on account of exports and imports, right? So we basically a country which export various goods, and we import especially the goods which are related to the crude oil and all, right? So the country's exports and imports will lead to the balance of payments, right? And the balance of payments, right, is the record of country's money receipts. When you export, you receive money, and when you import, you have to pay the money. So the balance of payment records the country's receipts for exports and payments for imports, right? So if your imports are more than exports, generally more amount of dollars you're paying, right? So when you're paying more amount of dollars, rupee gets depreciated because there is more demand for dollar and the supply of rupee increases. If your exports are more, if your exports are more, then you receive money, because of which the demand for rupee increases and the rupee gets appreciated. Right? So the currency fluctuations will also get affected because of the balance of payments. Monsoon and agriculture, right? So this is very, very crucial because of course, right, whenever there is good news related to monsoon, right, the markets will react in a better way, right? So good monsoon leads to higher demand for input and results in bumper agricultural production, which in turn leads to buoyancy in the stock market, right? So generally, see if monsoon is good, we know at least 60 to 65% of the Indian population of 140 crore lives in rural areas, right? Most of them dependent on agriculture. So if monsoon is good, their livelihood would be good, and if their livelihood is good, the demand for goods and services will be better. Because of this, the monsoon plays a crucial role in the stock market performance. So, stock market performance, we are talking from the perspective of stock performance, right? So, infrastructure facilities, and if you observe, right, the infrastructure facilities in the last maybe 10, 15 years have been seeing a lot of growth, and the rate at which the roads being constructed, the rate at which the other infrastructure facilities being provided, let it be railways, airways, is very, very good, right? So because of this infrastructure facilities, the economy will attract a lot of investments. That reflects the performance of the stock market. Demographic factors, right? So if you consider the demographic factors, the population, right? Of course, Indian population is highest in the world. Still, we got some advantage because of the demographic dividend. Unlike other countries, right? Unlike other countries, even unlike China, we have a good demographic dividend. Demographic dividend in the sense, right? In the sense that the population and the age of working, a working population, maybe if you consider 20 to 25, 25 to 35 like this, we have a good percentage of population, right? Which is very, very good for the economy. Suppose if you take the case of Japan, right? The Japan doesn't have a demographic dividend or demographic benefit because most of the population is aged, right? So when the population is aged, right, the generally the people may not be willing or ready to work, or they may not be able to work. At the same time, the government burden for the government is also high because of providing some social security, right? So that's the reason why it's always better to have the better demographic dividend. And India as a country, though its population is highest, we still enjoy benefit the demographic dividend. The capital formation, right? So the consideration of the investor should be the kind of so the capital formation is the inflows of capital into the country. That's what we discussed. We generally attract the FDI. We are, I think, the second best destination for FDIs after China. But because of the problems in China in recent times, right, we are able to get more amount of FDIs. Right? So economic forecasting, right? So generally, when we use the word forecasting, it is to understand the economy for maybe the future, right? So we forecast the economic performance, and if the economic performance is good in the next 3 4 years, then it would be great to see that the markets will react. Markets are always the leading indicators. Generally, the capital markets are leading indicators in the sense that the they react to the, suppose if there is a news that the economy is good for the next 1 year, then the market starts reacting to that positive news. If the economy is going to be the problem, right, then the markets start reacting negative to that news. So markets are always the leading factors, right, in so, right. So suppose if you see the gross domestic product, if it is good growth, then it is positive, bullish market. If it is decline, then it is negative market. Right. If inflation, if the constant prices, it is positive. Inflationary, deflationary prices, it is negative. So see here, if it is inflation or deflation, both are bad for the economy, right? Both are bad for the economy. Even the economy should not face the problem of deflation, right? In recent times, China is facing the problem of deflation, right? Even the deflation is bad. Deflation is decrease in the prices. That is also bad. But inflation is good, but it should be within the limits, within the target set by the RBI. Right? If unemployment rate increases, then it is negative. If unemployment rate decreases, it is positive. Individual savings increase, it is good. It is, if it declines, then it is bad. Interest rate is high, it is bad, and if interest rate is low, it is positive. Exchange rate favorable, then it is positive. Unfavorable, it is negative. Corporate tax high, negative, low, positive. Balance of trade, positive trade balance, which means exports are greater than imports, then it is positive. If balance of trade is negative, right, which means imports are greater than exports. This is exports. If imports are greater than exports, it is negative, right? So this is related to economy analysis. So when it comes to industry analysis, right? So this industry has been defined as homogeneous group of firms, right? So what is the relation difference between company and industry? Suppose if you take Infosys, is a company which is in IT industry. That's the basic difference between the company and industry. In company is a single entity, whereas the industry is a homogeneous group of firms, right? Homogeneous group of firms in the sense all the firms in the industry must be of similar kind, right? Have activity or similar line of production. You cannot say that Reliance Industries Limited or Reliance, which is into petrochemical business, will also be in the IT industry because their lines of production will be very much different, right? So banking industry, IT industry, steel industry, cement industry, right? So we have the classification of industries, and each industry consists various number of companies, but all these companies must be in the similar kind of activity, right? While taking all investment decisions relating to a particular industry, the industry's classification is very essential, right? Industry's classification is essential. At the same time, right? So the industry is generally classified, right, into growth industry, right? So generally, when I say the growth industry, the high rate of earnings and growth in expansion and adaptability of technological changes from time to time, right? So if a company, you should know the company falls in which type of industry. Will it fall in a growth industry? Will it fall in cyclical industry, defensive or cyclical growth like this, right? So if it is growth industry, say suppose you generally consider IT is a growth industry, or banking is a growth industry to some extent, right? Which will have a special features, right? High rate of earnings in all the companies which fall under the right industry, and adaptability to technological changes from time to time. Now, if you take the cyclical industry, the growth and profitability of this industry move along with the business cycles, right? Right? So when the industry is booming, right? Say suppose if you take the real estate, so if real estate to some extent is cyclical, or maybe when real estate is cyclical, cement, steel also generally considered as cycles. So what does it mean is the companies which fall under the cyclical industries, their growth and profitability depends on the business cycles. If the business cycle is in booming condition, the growth of these industries will be good. If the business cycle is in bad phase, then the growth of these companies will not be good, right? When it is defensive industry, right? So if you take pharmaceuticals and the maybe FMCG, right? So such type of industries fall under the defensive industry. Let what may happen to the business cycle, right? Right? Nothing happens to the industries which fall under defensive, right? Generally, what does it mean is though the business cycle is in bad condition, right, it may affect all the industries, but the defensive industries are may not be affected to the same extent where the cyclical industry or the growth industries got affected. Generally, the defensive industries are insulated to the changes or to the effects of the business cycle, right? Right. So you should also try to understand the industry life cycle, which generally fall in pioneering stage or startup stage, rapid growth stage, maturity, and stabilization. Right. So you need to understand the stage of the industry. Is it in the growing stage, or is it in the maturity stage, or is it in the declining stage? Right. The growth of the industry, right, in terms of growth, stability, and profitability should be analyzed in order to predict the future prosperity, right? So CMIE, Center for Monitoring Indian Economy, CMIE provides generally published data related to the growth of the various industries. So we can take the data from that and we can understand how the growth in the particular industry, right? So the cost structure and profitability of the industry, right? So suppose if you take two different industries, say let it be steel industry and IT industry. The cost structure consisting of fixed and variable costs, which affects the cost of production and profitability of the product. So when you take the cost structure of two different industries, right, steel and the IT, the steel industry generally consists of more amount of fixed costs. Right? The IT industry generally consists less amount of fixed costs but high amount of variable costs. So that's how we are supposed to understand the cost structure and profitability, because the profitability gets highly impacted by the cost structure for the industry. Right? The nature of the product, right? So what does it mean by nature of the product? Is the products produced by the industries are demanded by the consumers and other industrial units. So if the demand for the products good, then the industry will be good. Otherwise, so you need to understand with, suppose if you see airways, you would like to understand the demand for the airways for the next 5-10 years. So the biggest threat most of the airways as of now getting is not because of the competitors in other competitors from other airways. It is from the hyperloop which is being planned to, you know, uh, in India from Mumbai to Delhi, from Mumbai to Amaravati, like this, right? Where if this becomes reality, the hyperloop, if it becomes reality, you can travel from the Mumbai to Delhi in 1 hour, right? At an affordable price, which is also the environment friendly. So the biggest threat now the airways facing is not from their own competitors, it's from the hyperloop. Right? So you should understand the nature of the product and the demand for the product. Nature of the competition. Right? So you should know how competitive the industry is, right? How many number of players, how many number of players the industry has, what type of or the size of the players in the industry, right? Is it oligopoly or is it monopolistic competition, right? And how these competitors react to the some changes what you are planning to do, right? So government policy, right? So if you take any industry, let me tell you something on the gaming industry, right? In a recent note, what government did is the government banned or made it illegal the gambling, right? And at the same time, they made the fantasy games legal, right? So this government policy will attract many players to operate in the fantasy gaming industry, because when it became legal, right, the government will also get some benefit that when the players are operating, right, in a legal manner, right, the government can expect more amount of taxes. So the government policies will influence the performance of the industries, and most of the industries generally look for the favorable policies from the government. Any unfavorable, you take the case of telecom, you take the case of the petrochemical business, right? Most of the times, right, these industries will get affected by the policy measures taken by the government. Labor position, right? So suppose most of the Indian industries are labor intensive, right? And we generally, right, in a country like India, it is always better to keep the labor intensive rather than capital intensive, because of the population and the working age, right, is also high. So it's good to keep capital, sorry, the labor intensive, so that many of the people, right, much of the population gets the jobs. Research and development activities happening in that particular industry. Suppose if you take the FMCG, right, or if you take the pharmaceutical, automobile industry, all these, right, industries generally focus more on research and development because of the competition and because of the constant changes what they need to bring in their products. Otherwise, they'll be forced to leave the industry when the competitors take over their positions, right? So now the pollution standard has become much crucial because in recent the uh, United Nations meeting also, right, sustainable development goals have been developed, right, and when you meet or when you're supposed to meet the sustainable development goals, you're supposed to work more on the controlling the pollution and all other activities. Hello, hello,
Hello. Hello.
Anil, Anil.
Sir, sir, good morning.
Uh, so you're with me, right?
Yes, sir.
Right.
Sir, good evening, sir.
చెప్పండి. హలో,
Sir.
చెప్పండి. You have any other questions?
No, sir. Same questions, same ఉంటాయి, sir. Nothing, sir.
మెటీరియల్ వచ్చిందా మీకు?
మెటీరియల్ అదే సాఫ్ట్ కాపీ ఉంది, సార్.
సాఫ్ట్ కాపీ ఇచ్చిందా?
అవును, సార్.
ఓకే.
ఇదే సార్ మెటీరియల్. ఇప్పుడు మీరు ఇది క్లాస్ చెప్తున్న మెటీరియల్ ఉంది. నెక్స్ట్ వీక్ లాస్టా సార్? నెక్స్ట్ వీక్ లాస్టా సార్?
అర్థం కాలేదు.
నెక్స్ట్ వీక్ లాస్టా సార్ క్లాస్?
నెక్స్ట్ వీక్ లాస్ట్ మనం ఫస్ట్ 2 తీసుకోలేదు కాబట్టి ఐ స్పీక్ టు ది కిషోర్ సార్.
ఆహా, సార్ సార్.
చూద్దాం. మీకు ఎగ్జామ్స్ ఎప్పుడు, డేట్ ఏమైనా వచ్చిందా?
సార్ ఇంకా డేట్ ఇంకా ఏం రాలేదు.
ఓకే, ఓకే.
అది ఫస్ట్ సెమ్ది రిజల్ట్ అని చెప్పారు సార్. ఇంకా ఇంకా టైం ఉందేమో సార్. దీనికి క్లాసెస్ కాలేదు కదా, ఇది ఒక 1
ఓకే,
మంత్.
సరే సరే.
హలో
ఓకే.
సార్.
So we'll close in another 5 minutes, right? So we come to
సార్
the 5 minutes close చేద్దాం మనం.
సార్ ఇది అటెండెన్స్ ఉందా సార్?
అటెండెన్స్
అటెండెన్స్ మేము ఉందా సార్ దీనికి ఎట్లా?
మీ ఇద్దరే అటెండ్ అవుతున్నారు, ఎవరు అటెండ్ కావట్లేదు కదా, మీరు హుషారాని.
ఆ, అదే సార్.
నన్ను అడిగితే నేను చెప్తాను, మీ ఇద్దరి పేరే చెప్తాను.
ఓకే సార్.
రైట్.
అది సెకండ్ థర్డ్ క్లాస్ అవుతలేదు సార్. లాస్ట్ వీక్ కూడా అవ్వలేదు.
ఓకే, ఐ డోంట్ నో బట్ చూద్దాం, అది వాళ్ళు డిసైడ్ చేస్తారు ఇప్పుడు.
థ్యాంక్ యూ.
So in company analysis, right? So as I mentioned, we have qualitative and quantitative analysis, right? So you are supposed to understand the competitive edge of the company. Suppose if you take, right, the Reliance Industries Limited, right? So it is the number one company in terms of market cap, right? And it's being operating in many segments like, right, no, retail, petrochemical, they're into financial services, of course, geo financial services.
Yes, screen
So,
is not visible, sir.
okay, okay, sorry. Now,
Now okay, sir.
right. So to understand what does it mean by competitive edge of the company is the advantage what a company has in relation to the competitors, right? So most of the industries consist the various number of companies. Suppose if you take the IT industry, right? So we have huge number of companies in IT industry. If you take FMCG industry, we have more number of companies, right? So when there are more number of companies, the all the companies do not enjoy the competitive advantage. The competitive advantage is generally enjoyed by the companies which are highly, maybe performing very good, became much bigger compared to competitors, right? So they show the dominance over other companies, right? The large companies are successful in meeting the competition because if you take let me tell you a simple example, right? The Procter and Gamble PNG, right? PNG is one of the biggest competitors to Unilever, right? And P&G is the world's biggest FMCG company, right? So what they do is, if your size is so big and you have grown so much, right? You'll be having huge amount of capital with you or cash with you, which can be used to expand the business into various other segments, because of which it becomes difficult for the small players to sustain. So when there is very much problem in the liquid hand wash segment in US, right? What happened is the Procter and Gamble reduced the prices and still continued the business. So because of which, so what actually happened is the other players were unable to bear the losses of reduced prices and they left the industry. When they left the industry, P&G became the one of the biggest companies in liquid hand wash. So you should always be having, once you become bigger, you will enjoy the competitive advantage and you can show your dominance over the other companies. Right? So earnings of the company, right? So this is a bottom line. You should not depend only on the sales of the company, right? So see the if you see the income statement, the top line is revenue, the bottom line is net profit. Right? The bottom line is net profit. So if you look only at the revenue, right? If you do not depend only on the sales of the company, right? But should analyze the earnings of the company in relation to operating and non-operating revenue sources over a period of time. So you might be selling huge quantity of goods and services, and your sales will be high, right? But right? That doesn't mean that you are a good company. You might be enjoying highest amount of sales, but your net profit may not be good because of the cost structure, right? Maybe the salaries might be high, or you might be paying higher prices for raw materials. The other expenditure might be high. So, the analyst or the investor should take care of the top line as well as the bottom line, which is net income. The tax burden, everything should be deducted to get the net profit. Right? So when it comes to capital structure, of course, it comes under the quantitative analysis, but capital structure is the amount of the cost, right? What is being incurred by the company, right? So you may be raising capital in the form of equity, preference, and debt. Each of these capital generally comes with the cost, right? You're supposed to pay cost of equity, cost of preference capital, cost of debentures, right? So lower the cost, better it is for the company. The management efficiency, right? So whenever you're analyzing the company, one of the most important factors in qualitative analysis of the company is the efficiency of the management. You should understand who is the CEO of the company, or who are the promoters of the company, their background, right? How much experience the promoters have, how much experience the CEO has, right? And how the company has been performing, what are the important decisions taken by the management in recent times. So you're supposed to analyze all these to understand the company in a better way, right? What we do is we'll discuss the financial statements part, right, tomorrow, because this is one consisting of lot of ratios. So we'll discuss in detail about these financial statements in the next class. Right? Okay.
హలో హలో అనిల్ గారు,
హలో హలో
మీ
హలో.
దగ్గర కిరణ్ సార్ నెంబర్ ఉందండి?
అసలు సార్ మీరు దేనికోసం అడుగుతున్నారు?
అంటే ఇప్పుడు వాట్సాప్ గ్రూప్ క్రియేట్ చేశారంట కదా మన సబ్జెక్ట్ కి, మన కోర్స్ కండి.
తెలియదండి.
మీరు సాఫ్ట్
నేను
మెటీరియల్ ఎలా తీసుకున్నారు?
నేను అడిగి చెప్తానండి. అది ఇప్పుడు ఏంటంటే మనకు ఎవరు కూడా అంత టచ్ లో లేరు, కొందరు ఉన్నారు.
ఓకే.
మనం ఇందులో ఇది మన ఆన్లైన్ క్లాస్ లో కూడా మనం ఇద్దరమే అవుతున్నాం, ఇంకా చాలా మంది అవడంలా.
అవ్వడం లేదు. ఒకటి వాళ్ళు నాకు తెలిసి యూట్యూబ్ లో చూస్తున్నారేమో అని.
అవునవును, యూట్యూబ్ లో కూడా వస్తుంది, కరెక్టే.
కాకపోతే మనకి ఇప్పుడు బుక్స్ కావాలన్నా, క్వశ్చన్ అండ్ ఆన్సర్స్ కావాలన్నా ఎలా చేయాలి? ఎగ్జామ్స్ మళ్ళీ ఏప్రిల్లో ఉంటాయి అంటున్నారు కదా, ఎలా అనేది తెలియాలి మనకు కూడా.
ఫస్ట్ సెమిస్టర్ ఎక్కడ రాసిర్రు ఎగ్జామ్?
ఫస్ట్ సెమిస్టర్ ఇంకా అవ్వలేదు కదా.
అవునవును.